activists, welcome to the T Action channel. My name is Nanda, or you can call me Naisi. As you know, activists, nowadays, many traders want to get a big profits. However, they fail. It's not because the market is bad or the strategy is wrong, but it's because they don't manage their money and end up with a margin call. Today, I'm going to show you how to use a professional trading journal to protect your capital and ensure you never see a margin call notice again. Before getting into the technical part of the journal, we need to understand what a margin call is and why it happens. A margin call is a warning from the broker to the trader when the equity in the trading account falls below the required minimum level. This means the remaining capital is no longer enough to support open positions. When this happens, the trader must add more funds or top up again, or the broker will foreclose part or all of the position to prevent bigger losses. And why it happens? A margin call happens when your losses become too large, so the remaining capital cannot hold the open position. The main causes are over leveraging, opening positions that are too big, and not using a stop loss. This is where a trading journal becomes an early warning system. By checking the account registry tab, we can clearly see how much buying power is left before entering the danger zone. Let's take a look inside the trading journal. Okay, now let's move to the first tab. So in the first tab, we have a start tab. And in this tab, we need to enter the account balance and the strategy we use. This helps us track the performance of each strategy, so we know which strategy works well and which one does not. And in this tab, we have three menus. The first menu is account setup, and the second menu is market, and the last one is strategy. In the account setup, you can insert your name account, and for the market you can choose in which market you trading. For example, we have three, right? The first one in the stock, and the second one in crypto, and the third one in forex. And for the strategy, is a strategy that we use. As we know, traders have a lot of strategy, right? And this is the example of strategy. For example, scalping, trend, and swing. And in the trade log tab, every trade must be recorded in the detail. Why it is important? Because this is where we set the risk per trade. For example, if your capital is 100 million and you are only willing to risk 1% per trade, then the maximum loss is 1 million. This journal helps you calculate how many lots or shares you can buy. So if the price hits the stop loss, your loss stays at 1 million. This is the first key to avoiding a margin call. Calculate your risk before thinking about profit. And the next one is trade registry. In this tab, you can see whether your trades are wins or losses. You can also see your win rate here. If the journal shows that your win rate is only 60%, but you are still making a profit, it means your risk to reward ratio is a very healthy. Many traders get a margin call because of emotion. They want to take revenge after a loss. By looking at the trade record in this journal, you can stay calm. You will realize that one or two losses are part of the statistic, not the end of the world, as long as your money management is correct. Now, in account registry, in this tab, you can see your account status, such as deposit, withdrawal, and total balance. So, you can track all of your balance in this tab. And next, in the dashboard, all trading activity is shown in charts and diagrams. Make it easier to analyze your trading result. So in this tab, you can easy to analyze about your trading result. And the next one is calendar. In this tab, you can track your weekly profit result. So everything your result in a week, you can track it. And the last one is watch list. In the watch list tab, you can monitor stocks and cryptocurrencies directly from the journal without using any additional application. And you can add some stock or some cryptocurrencies. For example, I wanna insert or I wanna add some stock. For example, the emitter code is SUPA. So after that, you can see about the analysis of this stock without any additional application. In conclusion, trading without a journal is like driving a car with your eyes closed. Trading journal gives you eyes to see the financial health of your trading account in real time. Remember, the main goal of trading is not only to make big profits, but to stay in the market for a long time. If you manage your money with discipline, profits will come naturally. So, before you trade, follow your money management journal, control your risk, and protect your capital to avoid margin calls. I think that's all from me, and I hope what I share today can give more benefit to you about how to manage your money and avoid margin calls when trading in the market stocks. And stay active, be creative. See you in the next video. Bye bye.